Growing risk sentiment is setting the tone in global currency markets. Besides, optimism has spilled over into stock markets. The US stocks have hit new highs before the actual trade deal is finalized. Notably, the US dollar has regained momentum, though it usually trades in the opposite direction to a trend in stock markets. So the greenback opened the US trade in the green. At the same time, the Canadian dollar cannot find support even from the rising oil prices. The US-China trade talks are dominating the headlines. News agencies report on new details and twists in the trade relations. No wonder market sentiment mainly depends on such developments. Before the trade deal is settled, Beijing decided to put all the progress achieved at stake. It pushed President Donald Trump to remove tariffs on China's imports, which are due from mid-December. Moreover, Beijing calls on the White House to cancel tariffs imposed in September as well. China's Minister of Commerce confirmed that China wants all tariffs to be lifted or at least slashed twice to end the trade war. In this context, traders are cautious about the prompt resolution of the trade conflict. Nevertheless, trade-related currencies are developing a steady rally. Investors' confidence boosts demand for risky assets. The yuan has advanced to 7 against the US dollar, the strongest level since August. On the other hand, the safe haven yen is losing ground rapidly. Experts warn that the dollar-yen pair is set to climb to the upper border of the trend channel at 109 points. Traders are puzzled about unexpected strength of the US currency. Its index seems to have found support during a retracement, as some market participants wanted to defend the overall bullish trend. However, the rally in the stock markets and the dovish stance of the Federal Reserve could erode strength of the US dollar, as it often happens in the period of expansionary monetary policy. In the New York session, the US dollar index is trading at 97.68, with prospects for a further climb. Meanwhile, the Canadian dollar is extending weakness. The US dollar versus the Canadian dollar pair is still trading higher. Today, the currency pair settled up at near 1.3142. The loonie fails to benefit from the rally of oil prices. The buyers of the Canadian dollar are still concerned about cautious policy statements of the Bank of Canada following the latest policy meeting. If the greenback finds enough reasons for a further reinforcement, the US dollar versus the Canadian dollar pair could rise to 1.32 in the short term. That's all for now. Thank you for watching and see you back tomorrow.